Welcome to the Prospecting Today podcast, and we're joined once again this morning with Dr. Lawrence Yun of the National Association of Realtors. He's the chief economist, and we're so thrilled to have you, Dr. Yun, because we want to just get your take on what is happening right now with the market in terms of real estate agents and how are they doing, and is business good for them? Should they be nervous? What's it looking like?
Well, Kimberly, thanks for having me on the show. The market, what a year of surprise. I mean, we did not anticipate that pandemic would occur. The first couple of months of the pandemic, a scary time in terms of the impact from the virus, how deadly is it, and also the business essentially disappearing for a couple of months. But here we are in October, and the market has just roared back, such that the home sales activity in the second half will be comfortably higher compared to 1 year ago. The home prices rising at high single-digit percentage gains on a national basis, implying very strong housing demand. We could have even more sales, but just lack of inventory is hindering that process.
That's what I wanted to talk to you about. Is it an inventory shortage across the board in America? Or some areas getting harder than others? Or what does that inventory shortage look like? And is that why home sales are doing so well right now?
So first, when homes are taken off the market quickly as the buyers are rushing in to take advantage of the record low mortgage rates, inventory sinks. But many of the buyers are trade-up buyers, which means they are listing their home, but also buying, but this is occurring very quickly. The home building activity would be one way to ensure that we have those empty homes coming onto the market and essentially bring more supply consistently. But because of the pandemic, there was several months where construction workers had to stay in shelter. So that has hindered the inventory growth. But right now we are seeing about 20% decline in inventory on a nationwide basis. Many metro markets, roughly similar in terms of the percentage decline in inventory. If one can say what are the exceptions, is the very expensive cities, specifically San Francisco and New York City, where you are seeing more listings come on the market and the buyers becoming somewhat hesitant. And I think this is due to the fact that we have this work from home flexibility. And if that is going to be the new economy going into the future, people wonder, why should I stay in a small house in expensive San Francisco when I can have a mansion at more affordable prices by going further out into the deeper suburbs or even going to other states?
Have you been surprised? I mean, I know when we talked initially during the beginning of the pandemic, it was like, we don't know what to expect. There's record job losses. It could be one of those situations where people have to buckle down and just work really hard to keep their pipelines full with business. But it seems on the flip side of it, real estate agents didn't really take a huge hit. It seems like they've been very, very busy, and we're seeing a lot of activity in the market. Was that surprising?
We lost 20 million jobs in April. So that's a huge chunk of the economy just disappearing in a single month. Now, since that time, as the economy has steadily reopened, phase 2, phase 3, depending upon the state, we have recovered about half of those job losses. And also the massive stimulus bill has provided some income support, whether enhanced unemployment insurance, as well as the small business loans and the stimulus checks, $1,200 for families. People remember that. So at least there was some income support to minimize some of the damages from many people losing jobs. What is surprising is that just the overall confidence in the housing market. So it's not only about the market fundamentals of low interest rates, the inventory situation, but this is a major expenditure and people need to have confidence. And just this is completely surprising as the degree of how people have rushed in to buy real estate.
Do you think that's because you touched on it a little bit? Was it simply because they're stuck at home now and they're working from home and they're looking at their space and saying, like you indicated, they might want bigger space or they want space that's more conducive to working from home? Do you think that drove a lot of it in terms of like, not just I want to get out of a tiny space in San Francisco, like the example you used, but maybe just in general, this house doesn't work for what my new work life is going to look like.
It certainly accelerated that thinking. I think many Americans, young adults, always say owning a property is part of the American dream, but maybe they postpone that decision 5 or 6 years down the road. But when we had the pandemic, as they were stuck at home, no elbow room, maybe they need a dedicated office space, so that two-bedroom apartment is insufficient. They need to have 3 or 4 bedroom house, and just outdoor spacing where they can just exercise. Interesting, if one looks at the retail sales, for the most part, is down. But what is up is home remodeling, spending on gardening, as well as some hobby activities, things like buying bicycles or video games. So if people are stuck at home, they are valuing their house more now than before.
So what's some good advice you would give to agents during this time as they're looking at the market coming? I won't say coming out of the pandemic because we're still in it, but as fears are starting to alleviate and people are still spending and looking for homes, what's some of the advice you'd give to realtors?
First, well, we know that vaccine will be discovered whether later this year or early next year, but that does not mean that we are back to normal. It will still take some time to get the jobs fully back up. And for the realtors, there's more competition because we have seen the record number of licensees, people coming in, a record high number of realtor membership. So there is more competition, but it's the old business relationship where you have a close connection with past clients, serve them well, get the referrals. And also some of the past clients who may have been content with their home because of the pandemic, again, they're looking for that larger size home. So maybe there's an additional housing demand among their past clients.
Yeah, exactly. And so I know the National Association of Realtors is going to have their conference. It's going to be online in November. And you always give one of the first keynote addresses there. What can real estate agents look forward to in terms of what you have to say here next month with that big conference?
Well, you spent a year of surprise. So I will go into how the market fared in 2020 in terms of the big swing first downward and just rolling back up, and what to anticipate going into 2021. The work from home, again, the completely new phenomena, which also means work from vacation home. So whether or not the resort communities really begins to thrive in this new, perhaps this fundamentally shifted new economy.
Yeah, absolutely. Any other things that were super surprising in terms of like the research you saw coming out of the last year that you're going to touch on in the conference?
One of the research was that homeowners, surprisingly, even in the first few months of the pandemic lockdown, all the homeowners were very calm about the market condition. There was no panic selling. So somehow there was a resiliency that Americans believe that we will get out of the pandemic. So there was never a panic situation. But going into 2021, we do know some of the stimulus measure, things like mortgage forbearance, will likely come to an end. So the eviction moratorium will come to an end. And how does that disruption could potentially impact the market?
Do you anticipate when that forbearance comes to an end that we're going to see an increase in foreclosures?
Naturally, we will see an increase in foreclosures, but hopefully it's not the large numbers. Maybe people do find jobs by March of next year, as it currently stand at the timeline when the forbearance end. But from the market perspective, this is completely different from the subprime loan crisis. We don't have excess inventory. So if there is foreclosure, there are plenty of ready buyers to pounce that properties that's coming onto the market.
Yeah, absolutely. Is that something that you would say real estate agents should look into getting to becoming experts in, is in foreclosures again, potentially?
It would not be in large numbers. I think for the most part, it will depend upon job recovery, but at least it's moving in the right path. But the second part is that home prices have risen so much that many homeowners, rather than just abandoning it, they will sell it because there's still some equity that can extract out of their from the sale of the home.
Oh, yeah, very true. So what do you attribute that resiliency to? Was it the fact that the government came in with the stimulus, or why did we not see the panic from home sellers that we've seen in the past?
That is a difficult question to answer, but it just shows the Americans this confidence about their country, just the resilience that they will overcome whatever bad external factor shock the economy. So this is a testament to the American people.
Do you expect the interest rates to remain low heading into 2021?
Yes, so we are at the record low mortgage rates. Maybe it will bounce around, decimal point or two, but nothing, any measurable move either upwards or downwards. The Federal Reserve is at a maximum liquidity policy until the economy is fully back to normal.
Do you expect the upcoming election, to have any type of disruption in the housing market?
Well, if we look at the past presidential election, some people said this year is more unique with more animosity among the two parties, but all the past election shows that home buying is really a pocketbook issue. Is the mortgage rates favorable? Is the inventory available? Do I have the income? Is my job secure? So these are the determining factor for home buying. Maybe only Washington, D.C. region they see some swing related to presidential election, and also the very upper end luxury home sales, where some of the wealthy potential home buyers wants to see who wins, what the implication on the new tax policy may be before they determine what type of home they want to purchase.
Sure. Is there any type of research that shows whether or not home buying or home selling is better during a Republican versus Democratic election cycle, in terms of like whether we have a Republican in office or a Democrat in office? Do we ever see big changes in the housing market in regards to what party's in charge?
Yeah, no big changes. I mean, there could be some small differences. I have not really examined in that political party as much, but it's really the pocketbook issue. So however the economy is moving, this is how the consumers respond related to home buying.
And what do you anticipate the economy doing in the next 6 months or so?
I think it will be continued recovery. So 20 million job losses in the month of April, and then steady job creation. Roughly right now we have recovered half of those job losses. We have another half to go. It may take another 12 months, 18 months to get there, but at least the trajectory is moving in the right direction. More job creation. There are some industries still losing jobs, but overall on net, it is job creation, and hopefully this trend continues.
Well, wonderful. Anything else you'd like to leave with us as we say goodbye to you?
Well, it's been a year of surprise. There are many clients out there, but also more competition among agents. So be aware that it's a very interesting dynamics at play, but certainly the backdrop is increased home sales, increased home prices, which is certainly good for real estate.
Absolutely. So the bottom line is it's good to be in the real estate business right now.
It's very good backdrop for real estate.
Wonderful. Well, thank you so much. And again, we just want to remind everyone that NAR is November. I want to get the dates right. Do you have the dates, Dr. Yoon? November 6th? When does it start again?
I forget the exact dates, but it's going to be a fantastic program, as we always do. I mean, in person would have been better, but given what it is, virtual, so which provide more opportunity to people to enjoy all the programming without the travel. So please go into our website and check it out. It's going to be a great program.
And I just looked up the dates. It's November 16th through the 18th, and it's a virtual conference. So you're going to want to tune in to the NAR Real Estate Conference. So thank you again, Dr. Yoon, for joining us.
Thank you.
Thank you.